Hello everyone, and welcome to this presentation of Specialist Trading's Elite Forex Trading College. I'm real excited to be talking about this today because we're going to be sharing with you some of the techniques and some of the studies that we're going to be covering in our new Elite Forex Trading College. In fact, I'm going to share with you today a method that is going to be taught in the actual college. And looking at this chart right here of the weekly chart of the Canadian dollar, as we can see here, the method I'm going to be teaching you will be able to identify, with the help of a simple tool, a buy signal right here. And as we can see, just looking off the bars that we have currently on the chart, there's really not much information to go by, but simply by adding this one tool along with a pattern that you'll be looking for, you could have taken advantage of a very nice setup to gain potentially 1,100 pips in just about a month or so. So I'm going to be sharing with you how to find that in today's class, as well as more information that directly relates to our new Elite Forex Trading College. Once again, thanks for everyone showing up today. My name is Steven Primo. I am the president and founder of Specialist Trading. If you're new to our website or any of our webinars, just let me explain to you, our only goal, our only purpose at Specialist Trading is to educate you. I mean, our goal is not to force feed you signals on a nightly basis and tell you where to buy and where to sell and what trade to take. Our goal is not to say that we have the best generating profit system in the world where all you have to do is learn how to trade this system and you will have thousands and thousands of dollars per month. We don't believe in any of that. And our goal is not to tell you what the perfect time frame is or what the perfect market is. Our goal is simply to educate you so that you can put the power back in your hands. You see, it's our belief that the reason why most traders fail, upwards of 80% of all traders fail, is because you're relying on someone or something else to tell you how or what to trade. I mean, think of it. Look at your own trading right now. Do you go to a daily blog to find out what they think the market's going to do? Do you watch tons of news to get an idea of what to buy or sell? Or do you go to a chat room or a trading room to find out and get ideas on what everyone else is doing? It really, basically, in our opinion, when traders do that, what you're basically saying to the market is, I don't have any idea what to do. So tell me, give me an idea what I should be doing. Whereas our belief is you should come in with a formulated plan, one that's fit to meet your needs through the education you're provided, and you can make your own trading decisions, okay? Now, I've been trading for nearly 40 years. I started trading on the floor of the Pacific Stock Exchange, so my background is in stocks. I was on the floor for 16 years, and 8 of those years, or I should say, 9 of those years, I was a market maker or specialist on the floor. I traded through the crash. I've traded through just about every market environment imaginable, so I know what works and what doesn't work in terms of consistency. And so I've just been around every method, every technique, every type of environment. So this is what we do at Specialist Trading. All the things I've accumulated that I know have a certain level of consistency, I mentor and teach my students so that you can ultimately take that and formulate your own trading method and your own trading plan. Now, I have a great class to you today. I'm going to not only go into the curriculum of what's offered in our Forex College, but I'm also going to share with you this particular technique that you can start using and trading with. But before we do, as always, we are required to show you our disclaimer. So please take a moment to view this. I'm going to show you a lot of performance results using this particular technique and what's offered in our college. But please remember that we can in no way guarantee that any of the results I am about to share with you will be repeated. Once again, we're required to offer and show you this. So as you're taking a brief moment to view the disclaimer, I would also like to take this time to invite each and every one of you, if you haven't done so already, to follow us on Twitter. There's our handle right there at SPCLSTTRADG. Each and every day I post new information, anywhere from just financial wisdom to actual signals that our strategies have generated. So not just signals in the Forex markets, but also in futures as well as stock. Remember, this is just for educational purposes only though. Ultimately, we teach you all these basic formats for strategies so that you can decide how and when you want to trade them. Now, Twitter is rather limited because of the way it's set up. So if you'd like more detailed information in terms of educational videos and a lot more ways in which to find out what we do and about myself, my sister site, which is Pro Trader Strategies, has put together a Facebook page. So all you have to do is log on to Facebook, go into ProTraderStrategies.com. You'll see a lot more detailed information, educational videos, and different write-ups about what we do and the things we teach and offer to all of our students. Okay, now as I stated earlier, we are not first and foremost at Specialist Trading. We're not a signal generating company. We're not a systematic trading company. We are not basically a news company. We're just an educational company. That's all we do. Is our goal is to teach you, as you see here, not to force feed you and tell you what to trade, but to teach you how to trade with the specialist edge. In my opinion, education is the only thing that will sustain you. And by sustain you, I don't mean that you'll have a good year a couple of years down the road. I mean sustainability so that you'll be able to be trading 20, 30, 40 years down the road. Now, the reason why I say this is because I struggled tremendously when I first started trading. I know a lot of people would say, well, how could you struggle? You were on the floor. You had access to, information that no one else had. You had a lot more access to capital that no one else had. How could you have had a difficult time? Well, believe it or not, I did. My first couple of years as a trader, I didn't think I was going to last much longer on the floor because I was doing everything that I had been taught to do. I was reading all the books. I was going to all the seminars. We didn't have chat rooms or trading rooms then, but we had newsletters. I was subscribing to all of them. I was listening to all the news. And guess what? Nothing seemed to work. And I'm sure many of you are probably going through that right now. Now, sure, every once in a while, I would get a good signal and it would work perfectly. And I think, okay, I'm back on track again. But then the next 2 or 3 trades, I'd give everything back and I'd be right back to zero. So it's extremely, extremely frustrating. I was lucky enough to come in contact with a couple of other traders on the floor. These were specialists who have been trading around 40 or 50 years each, and they were able to turn my trading around. They taught me the simple but very basic sound fundamental educational things that I teach my students. And this is what has sustained me for nearly 40 years. So here's what they taught me. Basically what I learned trading on the floor of the exchange was very different from what many of you, think trading should be. Here's what my mentors said to me. They said, Steve, successful trading should be non-subjective. All right, so what does this mean? Basically what it means is that 2 traders looking at the same chart should come up with the same analysis. In other words, how many times have you had an idea about a currency pair or a stock or a future or the market as a whole in general, and someone else comes up with an entirely different, trading plan or entirely different scenario as to what that market is going to be doing? It's because everyone is subjective. Everyone's bringing in their own different issues and different ideas onto what that particular market is going to be doing. But we feel trading should be more cut and dry, where 2 traders that have taken my courses and my classes should come up with the exact same scenario as to what they should be doing, or at least what side of the fence they should be on, a buyer or a seller. Secondly, they said trading should be consistent. By being consistent, what do we mean? Well, we mean that we want to be, prosperous. In other words, we don't want to fail, but we're not looking for home runs. We're not looking for this fly-by-night methodology that's going to generate thousands and thousands of % a year, and that you'll be able to go on that dream vacation or buy that home that you've been looking for. We don't promise or believe in things like that. What we really try to instill in all of our students is consistency, because consistency is ultimately what will sustain you. Not some system or technique that generates tremendous results and sure may do very well one year, but ultimately may give it all back the next. That's not going to sustain you. What will sustain you are methods or sound education that is a 2-step forward, 1-step back approach. That is what will have you trading 20, 30, 40 years down the road. Now, my mentors also taught me that successful trading should be as simple as possible. Now, look at your own trading, or look at some of the teachers or websites you've gone to where they have a trading plan. And usually these traders who've been trading for a relatively short time, and that's anywhere from 5 to 10 years, they have an extremely complicated trading methodology, anywhere of 20, 30, 40 rules, or some convoluted indicators you never heard of, or some plan that you have to follow that is far too difficult to keep in place at all times. Okay, it's far too complicated. My mentors taught me that you should have a simple plan as possible. That's really how you'll become more consistent, as opposed to being more and more complicated. In fact, it's been my experience in my nearly 40 years of trading that the plans that are the least complicated, the most simple, have the most validity to them. So most of our trading methods or techniques have maybe 4 to 5 rules. That's it. Maybe 1 or 2 indicators at most. That's it. Nothing extremely complicated, nothing difficult to learn. And then lastly, My mentors taught me that successful trading should make you a part of the process. Remember I said how most traders are either going to some chat room or they're listening to the news to wait and decide what they want to do that day, or they're watching some trading guru on TV. Basically, whenever you do things like this, out of the norm, you're basically telling the market, I don't have any idea what to do, so tell me what I should be doing today. The news has to tell me if I should be buying or selling. This indicator has to tell me where I should buy or sell. This guru has to tell me what the perfect market is, what the perfect time frame. You're not making a single decision on your own. So what we want to do is make you a part of the process. We want to provide you with the tools and information that you need that will get you on the right path and on the right track, some structure, but then have you decide. Just the same way an athlete decides, he's not going to play the same way each and every game. He plays a different team every time he plays, so therefore he has to change his playing a little bit. Sometimes he'll play more aggressively, sometimes he'll do something differently because he's changing and altering his game plan with whoever he's competing against that particular day. All right. Well, it's the same way with traders. Not that you're competing with the market. In fact, you're doing the opposite. You're just trying to be in sync with the market. But you have to change in order to be in sync with the market. You can't do the exact same thing each and every time. That's why at Specialist Trading, we don't believe and or trade in systems, because they take you out of the game. They turn you into a robot and make you do the exact same thing each and every time. And in my experience, once again, in nearly 40 years of trading, I found no consistency in that style of trading. So the way you become consistent is having a nice solid structure to your trading plan, but then a structure that allots maybe 25 or 30% to make you in charge so that you can make your own trading decisions. You can decide, say, well, I'm not going to trade this way today. I'm going to be more aggressive. Or instead of entering here, I'll decide to enter here. Or instead of exiting here, I'll stay in a little bit longer and squeeze out as much profit as possible. When you trade like this, you're putting yourself in the game, and in my opinion, this is how you become successful, okay? So these are the 4 things that you should be applying to your trading, and go back and look at your trading, see if they have these in place. If not, I'm sure it may be why many of you may be struggling in your trading right now. So here's what we're going to be offering in our Forex College curriculum. We've only given this college once before, and we're going over it again. It's a little bit more revised. We have some new things we're offering here, but it's a great way to really, we feel, increase your odds for success when trading the currency pairs. Now, it's 6 weeks of solid education. In week 1, we're going to be talking about a little bit more about what I just went over in the last few minutes about the foundation and the building blocks of Forex trading, and basically our philosophy of how to trade not only the Forex currency pairs, but virtually any market. In weeks 2, 3, and 4, each week we will take another strategy that will teach you all the basic techniques and ways in which to trade it. Week 2 will be strategy number 1, and that's a really consistent pullback strategy. Week 3 will be strategy number 4. And that is probably our most consistent strategy to date. It works basically with breakouts, with pullbacks, with consolidation. It can work in any market, any time frame. It's really our most consistent strategy to date out of anything, because it can transfer over so well onto any time frame in any market. Week 4, we will cover strategy number 5, which is our fine-tuned strategy that just concentrates on candlestick patterns, okay? And we'll show you exactly how to implement that. And I'll show you a few examples of that later on in today's presentation. Now, in week 5, we go over one of our most popular tools. It's the PET-D. Why is it so popular? Because it's not a strategy, it's not a system. What it is a trend or a directional tool to find out how to be in sync with the trend. I'm going to show you just a few examples of that in just a few moments. And lastly, in our final week, week 6, we're going to go over putting everything together, and I'm going to be talking about something that is only offered in the college courses. That's advanced trade management. We're going to go over this, and this is a technique I was taught on the floor of the exchange that has really helped me a lot and added to my consistency. This is something that we don't have any individual courses on. We only teach it for college course members. So that is the basic curriculum, 6 weeks of solid, jam-packed education that I have accumulated in my trading career. And in fact, I want to share with you something today that has to do with the PET-D, as you can see. This is one of the continuation techniques we will be talking about in the course, and I'm going to share it with you and just go over in detail how simple it is to be in sync with the currency pairs and apply this simple trading technique. It's continuation trading with the PET-D. Now, I know a lot of you don't have the PET-D, but basically it's a great tool for getting you in sync with the market. And so what we're going to be doing is adding a continuation technique with this particular tool. All right, so many of you were saying, well, what is continuation trading, Steve? I've never done that. I'm not familiar with that term. Very simply, continuation patterns occur mid-trend and are a pause in the price action of varying duration. So basically what we're looking for is some established trend, which the PET-D is going to help us identify. And then we're looking for some type of a pause in that price action, okay? Now, secondly, when these patterns occur, it can indicate that the trend is likely to resume after the pattern completes. So once the pattern completes, this is a really big setup that most likely the trend is just pausing and now it's going to resume in our desired direction. And then lastly, a pattern is considered complete when the pattern has formed and then breaks out of that pattern, potentially continuing on with the former trend. So we're looking for some type of breakout and a continuation of the former trend. All right, so we have to add a little structure, which means we're looking in the form of some type of pattern, and then we want to jump on board once it breaks out. So here are the continuation technique requisites for this particular technique I'm going to be sharing you. Now you notice I didn't say this is a continuation system or a continuation strategy. That would require that we give you all the exit points, all of the stop placement, all of the exact entry points, all of the money management. Remember, this is in the course. I'm just showing you the high probability setup area for this particular class right now, but you'll see how simple it is. All right, what we need first of all in our requisite is a 3-bar pivot high. We're looking for this particular pattern, okay? So if you're not familiar with a 3-bar pattern pivot high is, it's simply we have 3 bars, and remember, it doesn't matter if these are a 5-minute bar if you like to trade intraday. It doesn't matter if these are weekly bars if you like to swing trade, or even monthly bars. All right? It absolutely makes no difference. But you need 3 bars to create this pattern, and bar number 1 creates a high. Bar number 2 creates a higher high, and then finally bar number 3 creates a lower high. So you kind of have this kind of an arrow approach. If you connected the dots, connected the highs. Okay, that's what we're looking for. We're looking for that 3-bar pivot high, and regardless of time frame. Now, if we're looking to sell, we're looking for a 3-bar pivot low. So it's basically the same pattern, but just turned upside down. So it's a 3-bar pattern. Bar number 1 creates a low. Bar number 2 creates a lower low. And finally, bar number 3 creates a higher low. So now you have this, if you connect the dots, you kind of have this V pattern down here, okay? So finally, the last requisite we need for this particular continuation technique is to add the PET-D. And as I stated earlier, the PET-D simply stands for the Primo Early Trend Detector. Now, I was introduced to this nearly 40 years ago on the floor of the exchange, so it's not something that I devised. And the reason why we call it the Primo Early Trend Detector is because we have formulated it into a proprietary color bar algorithm. So the actual color bar algorithm is the PET-D. So what it simply does is colors your bars regardless of time frame, regardless of market. If you have a series of green bars, you're in an uptrend. It's that simple. And if you have a series of red bars, you're in a downtrend. So look how simple this is. There's no convoluted logic you have to put together here to find out what the trend is. There's no higher time frame you have to look at to find out what the lower time frame is doing. There's no news you have to look at. Everything is just in the color. So let's see how we can apply it to this. Here are the rules for going long using this particular technique. But remember, these are just the entry rules. We're not going to talk about exiting. We're not going to talk about stop placement. That is all in the course. We give you all that different variables of how to exit, where to enter, where to place your stop, money management. That's all in the course. We're just pretty much giving you the solid entry or high probability environment for this particular technique. All right, so the currency pair creates a 3-bar pivot high. Remember, we just showed you that pattern. And remember, it does not matter if this was a 5-minute chart or a daily bar or weekly or monthly bar. Absolutely makes no difference. All right, so we've located a 3-bar pivot high. The 3-bar pivot high and all of the following bars are colored green. Okay, so it does not matter what the color is coming up to that 3-bar pivot high. But once we see those 3 bars, they all have to be colored green, and then the following bars all have to be colored green by the PET D. Now we're going to simply buy when price trades 1 to 3 pips above the 3-bar pivot high. Okay, and it's up to you. It can be 1 pip above, you simply buy at the market. Some of our students like to wait for this to trade 10 pips above to give them more room and more confirmation. Once again, it's totally up to you. There's no right or wrong answer. This is what we encourage. We want you to become a part of the process and make your own trading decisions. So what we're looking for is this 3-bar pivot high, but instead of just looking at this, the plain structure, we want to make sure that all 3 bars are colored green. Okay? If we find that, and then the remaining bars continue to be green, we're going to wait for price to trade 1 to 3 pips above, and that's our entry point, a breakout to the upside. What if we want to go short? Well, we just reverse the rules upside down. These are the entry rules. We were looking for a currency pair that creates a 3-bar pivot low, regardless of time frame, okay, and regardless of currency pair. Now the 3-bar pivot low and all of the following bars, all the bars that follow that 3-bar pivot low must be colored red. This is ensuring us that the trend remains down by the PET D. We're going to simply sell when price trades 1 to 3 pips below that 3-bar pivot low. Okay, that's simple. So if we look at this standard pattern here of the 3-bar pivot low, what we want to see is that all 3 bars are colored red, right? And if the remaining bars that follow continue to be colored red, well, we're going to wait to see if it penetrates through the bottom of that 3-bar pivot low. If it does, that's our entry point to go short, to sell. And that's it. Okay, somebody say, well, Steve, it's too easy, it's too simple. Don't you remember what I just stated a couple of minutes ago? Trading should be as simple as possible. Remember, my mentors taught me that trading should be extremely simple. They looked at my screen and I had about 20 indicators. I had all the news events on my screen there, flashing whenever a news event came out. I was watching multiple time frames, multiple markets. It was just amazing how anything could get done because it was so overcomplicated. My mentors taught me that the secret to consistency is not through overcomplicating your trading plan. It's by simplifying it, by throwing away or discarding all of what they called useless noise. All right, so let's look at some recent continuation technique examples in the currency pairs. All right, here's an older chart of the Swiss franc, okay? Now, as we look at this chart here, we have not applied the PET D yet, and we see here that we kind of have a little top formated here. Now, most people would say, well, this thing has really gone up way too quickly, way too much. The chat room I go to says that we are in tremendously overbought territory because we've gone up too much in the Swiss franc. In fact, a lot of the institutions are selling here, so I'm going to be a seller of the Swiss franc. Okay? See how overcomplicated I made by trading, and you see how all of my decisions were based off of what someone or something else was telling me what the market was going to do. I wasn't listening to the only thing I should be listening to, which is the market. All right, so how do I know what the market wants to do? I apply the PET D, and the PET D is not an indicator or a tool that comes up with its own definition of what the market is. The PET D is a translator. It translates what the market wants to do. So it's not really making up its own decision. It's listening to the market and then translating for you so that you can understand what the market wants to do. So all you have to do is apply the PET D, and we see here that at this point all the bars turned green. So since the short-term uptrend is up, we are in no position to say it's going lower. All right? We won't sell until we're in a downtrend. As long as we're in an uptrend, we're going to be looking for a buy situation. Now we have a 3-bar top right here. Bar number 1, bar number 2, and bar number 3. So this is formulating this little continuation pattern. We're going to buy if we trade above this, 1 to 3 pips above. But remember, all the following bars need to continue to be green. So let's take them one by one, step by step. All right, here's the next daily bar, still green. We haven't broken out yet, but we're still green. Here's the next one. We're still green. We're waiting to break out. And here's the next one. We broke out. Now, as you see, we did not close above. It does not matter where we close. All that matters is that you trade 1 to 3 pips above, and that's your entry point, okay? So you've entered into the currency pair, and in the next 3 weeks, it's 350 pips to the upside. Now, we're not saying that you would have taken 350 pips. Maybe you would have. It's up to you. This is how you become a part of the process. We're not going to tell you where to exit and where, how many contracts to buy. That's totally up to you, but we give you the tools and techniques to help you decide which ones you want to apply. So we give you dozens of exit placements. We give you dozens of entry placements and different stop placements as well. And then you decide how you want to formulate them. Remember, it's an educational company that puts the power in your hands so that you can mix and match to see what applies to your personal style. All right, that was an older chart. Let's go to something more recent in the Australian dollar. Once again, someone looking at this would say, well, Steve, I have a really good indicator here that confirms bottoms and tops. And you see we made this low right here in the Australian dollar coming into May. And then right here, we made a lower low, but it wasn't confirmed by the indicator. So we have some divergence here. So I like to trade divergence. So this is telling me I should be buying right here, okay? So this is a really good buy setup because there was a divergence. The indicator did not confirm this, all right? So, all right, you're taking your cue off of the indicator. Someone else could say, well, Steve, no, this is a really good support level off of my Fibonacci support and resistance levels. This is where all the support comes in. So I'm going to take a shot here and go long because we've really come down quickly, and most likely we're oversold at this support level. Do you see how this is the way we've been trained to make our decisions based off of these techniques and tools that really have no consistency? Because trust me, if they had consistency, 80% of all traders would be making money, but it's actually the opposite. 80% of traders fail. So there's no consistency in these traditional methods. What we have to learn to do is stop listening to outside sources and listen to the chart in front of us. So how do we do that? We apply the PET D, and once we apply that, we see that, well, the chart was telling us that it wanted to go higher because all the bars were green and created this short-term top right here. But we never traded above it, and then the bars started to change color. Okay, so now we look for a short-term bottom. Well, is this a bottom right here? Yes, but remember, we need all three bars in that three-bar pattern to be colored red. And they weren't. Okay, we have a little three pivot top here, but they're not all green. But finally, we have a 1, 2, 3 bar pivot low. So this is actually telling us that if we trade below that, you don't have to close there, but if we trade below it, we should be selling. So forget all the overbought, oversold indicators, forget all the institutions buying or all the support and resistance levels. Just listen to the market. The market is telling you that if I go below that, most likely we're going to be going lower. So that's your sell point. And guess what? The very next bar, we went lower. So what happened to all the support? Okay. And ultimately, in the next 3 weeks here, that's 300 pips to the downside that you had to work with. You could have gotten in and out and maybe in that one day said, you know what? I sold right here. I got out at the end of the day. That's fine. Or you could have waited a little bit longer. It's up to you. We want to put the power back in your hands. How about the British pound? Okay, this is coming into May once again. We see here that we have the colors switching back and forth. We have some tops and bottoms, but nothing is consistent in color until right here. Bar number 1, a higher bar number 2, and a lower high of bar number 3, and they're all green. So this fits our buy setup, okay? Only if the bars continue to be green and we trade above here on the British pound. Well, the very next bar we did, as you can see, we traded there and look what happened. Now, at this point, most traders would say, well, that was a fake out breakout. Steve, this stuff doesn't work. I bought there and it went straight down. Remember, we teach you where to place your stops. We teach you different points of that. We teach you different exit points, entry points. It's up to you. And you don't even have to take this trade if you don't want to. Remember, we don't teach or trade systems. But had you taken this trade, even at the end of the day, what was the color of the bar? Closing towards its low in the bottom 25%, it was still green. So the PET D was telling you, we're still in an uptrend. Don't worry. We're still going higher, most likely. And as you can see in the next week, 250 pips. Here's a weekly chart of the Canadian dollar, the one I started out the presentation talking with you about. Once again, with the limited information we have here, most traders would say, well, Steve, there's not enough information. I don't have any news about this. I don't know what I should be doing here. So the market really is not telling me anything. That's not true. According to the things that most people follow, yeah, the market wouldn't be telling you anything. But according to what we teach you at Specialist Trading, the market is telling you that the majority of the bars are green. So we're in an uptrend. All right. So if you want to use this technique, this continuation technique I'm teaching you today, here is your setup right there. There's the 3-bar pivot high. So as long as the bars remain green, we're going to buy once we trade 1 to 3 pips above this on a weekly basis. Now, the very next week we did, and in the next month or two, that was 1,100 pips to the upside that you could have worked with. 1,100 pips, $11,000 per contract. Did we look at any news? Were we following any economic indicators? Were we looking at any support and resistance lines? Absolutely not. We don't teach or focus on that at Specialist Trading. We only focus on what the market tells us it wants to do, and then we apply structure so that we can jump on board at opportune times. Now here's a monthly chart of the dollar yen, okay? So it doesn't matter if we look at intraday, weekly, monthly, the same thing applies. Looking in hindsight, someone could say, boy, how could I have taken advantage of this? Well, you know, starting back as early as November of 2012, the PET-D was coloring all of the bars green well back here, well before the really nice uptrend began. So you knew right off the bat you were going to be in an uptrend, and you could have taken advantage of the very first continuation setup right here, and that's 2,000 pips in the next couple of years to the upside. We can also go to an hourly time frame. Here is the euro dollar going just about a week or so ago on the 28th, 29th of May. As we can see, we have the bars kind of going on and off from red to green, but at this point right here, we start to be full red colors, and guess what? We have a bar followed by a lower one, followed by a higher low, so that creates our little pivot low right here. All the bars are red, and you could have entered, and in less than a day, that's 70 pips to the downside. Now, someone looking at hindsight would say, well, yeah, Steve, it's easy to see that we were in a downtrend. You're right, but how did we know we were going to be in a downtrend way up here at these highs? The PET-D was telling us. Now, a lot of people will say, well, Steve, this all is fine when you have a really nice trend in place, but what happens when you have these down and up or up and down markets? You know, you're going to get whipsawed. It's going to be tough. Well, we're not sitting here, and as I stated at the very beginning of the presentation, we don't promise nor do we teach methods or strategies that generate, consistency, or I should say profitable trades each and every time. We generate techniques that have consistency, which is 2 steps forward, 1 step back. We're not trying to get you in at the top and get you out at the bottom. We're just trying to have this level of consistency in our trading. Now, as we see here, the Canadian dollar coming into May was in a downtrend. At the beginning of May last month, it started moving up. So how could we have taken advantage applying this simple continuation technique with the PET-D? Well, the first thing you want to do is apply the PET-D, and as we were going down, you see how the PET-D was coloring all the bars red. And so here's our first 3-bar pattern. You could have sold here and had 250 pips to work with on the downside, okay? It's up to you where you wanted to get out. You could have tried to squeeze as much profit as possible, which we teach you about in the class, or you could have said, you know, I'm going to take a quick 50 pips and get out. And once the trend changed, once the bar started turning green, well, you look for the same continuation technique and another 250 pips to the upside, okay? Now, these are great techniques. This is a great continuation technique. This isn't even the strategy. We're not even, going into strategies 1, 4, or 5 yet. Those are completely different strategies with completely different sets of rules. But these are great techniques that you can apply to virtually any time frame and any of the currency pair markets. And they work the best with the currency pairs. But the beauty is you can also apply them to stocks, ETFs, futures, and commodities. So you don't have to worry if you say, well, Steve, I do a little bit of trading with the currency pairs, but I also do a little bit of trading with stocks. I also trade commodities. I also trade futures. Guess what? You can simply transfer them over onto those markets. And there's not a lot of changes you have to go through. In fact, most of them are going to stay the exact same. We go over this with you in the course, and we show you how to apply them. And I would say about 90% of the techniques stay the exact same in whatever market you decide to trade. So let me show you some examples here. Here's a stock CVX, as we can see here a couple of months ago. This, I believe, is a strategy number 4 setup to go long, and the stock gained 9 points in 3 weeks. The same strategy I'm going to be teaching you in the Forex College. As we see here in PRGO, this was in April, the end of April, a month and a half ago. This was a strategy number 5 setup to go short, okay, on the 20th of April, and the stock went down 30 points in 2 weeks. Obviously, some news came out to make that stock go much lower, but did we know what the news was? In other words, did the company and the CEO call me up and tell me to tell all my students to go short? No. We only listened to the market, to the chart in front of us, and it told us to go short PRGO well before the news came out. Now you can apply this to ETFs. Here's the Russell 2000 Index, the IWM ETF. At the end of March, a buy signal was generated. I believe this is a strategy number 1, one of the strategies we'll be teaching you in the course. And the stock, the ETF, went up 8 points in 1 month. You can apply this to intraday trading. You like to trade the intraday futures. Okay, here's a 15-minute chart of the E-mini from this past month. Here's a 15-minute chart giving us a sell signal, I believe a strategy number 4 sell signal, and it went down a little bit on this day, but if you held on and held your position carrying over into the next day, you would have reaped some really nice benefits off of the opening. And then lastly, if you like to trade commodities, here's a chart of crude oil from April going into May. Okay, this is strategy number 4. As I told you, one of our most consistent strategies. You'll be learning this technique and strategy in its entirety. As you can see, you can apply it to any market, any time frame. Here we look at the crude oil chart, and 2 signals to go long were generated at the beginning of April. Now, crude oil has continued to go higher. Wouldn't you have liked to have been long since the beginning of April in crude oil? All right. We didn't know it was going higher. We don't follow any economic or fundamental conditions of crude oil. We don't believe in that, once again, because they're too subjective. Everyone has a different way of discerning what it means. All we do is listen to the chart in front of you. And after our 6-week course, you'll know exactly what the chart is telling you. Now, as an extra bonus, as I stated earlier, we're throwing in a technique or a method I was taught on the floor that has helped me considerably in my nearly 40 years of trading. That's the ATM method. And that stands for Advanced Trade Management. Let me just show you what it is. It's a technique, it's a simple formula that you must calculate with your trading strategy. But what it does is it will have you trading when your strategy is generating signals like this. As we see here, everyone loves to trade when your strategy is working perfectly, okay? As we see, these are actual signals in the euro dollar from some time ago, though, that were actually taught in our college that generated these signals, and each and every one of them was profitable. Now, this will happen from time to time, but this will also happen from time to time. The exact same strategy on the exact same currency pair may generate signals such as this. The beauty of the ATM method is that it will know when to have you trading your strategy and when to keep you out. It will base this off of drawdowns, and it will keep you out of markets such as this. And this is what we all, really don't want to be involved in. This is when the markets go into their chop phase. So this is the advanced trade management. Once again, a technique I was taught on the floor, a simple formula you have to put together when trading, but it's so powerful that we only teach this money management technique in our colleges. We do not have a separate course of this. This is not something sold separately. We only can provide this in the college. So this is an extra added bonus. And remember, the other bonus we have is the PET-D, as I showed you earlier. The PET-D is a great, great tool. And the beauty of the PET-D, as you see here, is that it tells you which direction you should be trading. Now, once you know the direction that the market is going in, you can apply any strategy. So it just doesn't have to be one of my strategies. Let's say you have a strategy that you feel comfortable with that maybe you've devised on your own. Well, you can apply this in sync with the PET-D, and we really feel it will increase your odds for consistency. As you can see here in the euro dollar, someone looking at this in hindsight, at this older chart, would say, well, yes, Steve, easy to see that we're in a downtrend. You're right. Anything in hindsight is easy to see. But would you have liked to have known you're in a downtrend way up here at these prices in the euro dollar? How did we know? Because all of the bars were colored red by the PET-D, and they continued to stay red. Now, I know a lot of you are saying, well, Steve, I love this continuation technique you shared with me today, but you know what? I really don't need anything to tell me what the trend is because I can kind of see for myself. Well, at times you may be able to do that, but trust me, I've been using the PET-D on a daily basis for nearly 40 years. That's how powerful it is, and that's how much it helps my trading. And even if you think you know what the trend is, many times the PET-D will help you by keeping you out of bad scenarios and putting you into the correct ones. Here's a perfect example in April of the Australian dollar. Someone could have looked at this and said, well, we're in a downtrend. Here's that 3-bar pivot low that Steve talked about, low followed by a lower low, then a higher low. So I don't need the PET-D to tell me. I know we're going lower. I'm going to sell once we just trade below this. So the next bar goes lower, closes near its low. So you say, boy, this is going to be easy. I'm going to have a nice profit. I'll just stay in for a couple of days, maybe 50, 75 pips, and I'll get out, okay? Well, look what happened. And the reason why there was no consistency in that trade is because, remember, in order to sell, you need each and every bar of that 3-bar pattern to be colored red. And the first bar was colored green, only the second bar was red, and the third bar was green. So this was the PET-D telling you that there's no real, clear, concise trend yet. So you never would have taken that. Now, once we started to have consistency in green colors along the way, well, guess what? Here's your 3-bar pattern to the upside. And you could have taken advantage of that and gone long and made another 50 pips to the upside if you would like. So you see how the PET D really will help you be in sync. It's not just enough to use this technique I share with you today and think that it's that simple, you don't need it. The PET D really keeps you out of bad scenarios many times and gets you in the good ones. That's what adds to consistency. You can also use it long term. Now here's a long-term chart of the S&P index. These are all monthly bars. We see here, looking back 20 years on the S&P index, how we had the rise up to the dot-com crash. Then we bottomed out after the crash after that and started to make new highs again. And then we had the banking crisis in 2008. And then we bottomed out in 2010, and now we've been going up ever since. Well, if we add the PET D, we'll see that we could apply this technique as well with the PET D on a longer term time frame to indices. So lots of different ways to apply it. So let's go over the college curriculum once again. The first week we will be giving you the foundation and the building blocks of our philosophy of trading the Forex market, and any market for that matter. Weeks 2, 3, and 4, we go into our most consistent strategies for trading the currency pairs. That's strategy number 1, a pullback strategy. Strategy number 4, a great continuation pullback strategy as well. And then strategy number 5, which is based off candlestick patterns. Week 5, we go into PET D and all the different uses and ways in which you can apply it, ways in which you can look for different techniques and trading techniques within it. And then lastly, week 6, as we go over advanced trade management, I show you how to calculate that formula to keep you in the good markets and out of the bad. And lastly, we put it all together with any questions you may have going forward. So 6 weeks of live education coming from me, someone with nearly 40 years experience, so that you can ultimately put the power back in your hands. Now, one of the things we didn't mention is that once you get a little bit of knowledge under your belt, we also provide you with email alerts. And this is for educational purposes only. Remember, it's not our goal to force feed you signals. It's our goal to teach you. But one of the ways in which we teach and instruct you is by giving you alerts that when a signal has been generated, so that you know what to look for, so that you know what constitutes a valid signal and what doesn't. Now, on the 13th, just 2 or 3 weeks ago, this alert was emailed out to all of our currency pair traders that strategy number 5, one of the strategies we're going to be teaching in the college, generated a new signal to go long in the Swiss franc. We tell you where to buy. We also tell you where to place your stop. And these are all just the basic standard format. Remember, we're not a systematic company, so there's actually just a basic shell of which way to trade, but then we give you different variables so you can pick and choose and alter the strategy to meet your needs. Now here's the actual chart of the Swiss franc. This was generated on the 13th. A strategy number 5 signal was generated here to go long. Now, one of the best ways we use the PET D, one of the ways in which I'll reveal right now, is once a signal is generated in any of our strategies, it could be any of your strategies as well, you just want to see that the PET D confirms it with being the same color. So in other words, on the 13th, a buy signal was generated. In order for a buy signal to be confirmed with the PET D, it must color that day green. So all you have to do is add the PET D, and we see here that all the bars are green. So this is the confirmation you have now from the PET D. So right now, you not only have the consistency of a high probability trading strategy, but you also have the consistency of the PET D confirming it. So now you have both those things going for you. And as we can see, the Swiss franc went up 200 pips in the next couple of weeks. So that was an actual signal that was generated by one of our strategies we will be teaching. As you can see here, we have a number of traders from our last college that really love what we're doing. We have tons of testimonials on our websites, not only my website, but also the Pro Trader Strategies website. I'd like to just read you one from our last college that says, Steven, I have been day trading the Forex for some time. I was hanging in there with good money management, but not really making any money. Since discovering you in the 50-period moving average and using strategy number 4 since September 19th, I've locked in 873 pips and have 5 open trades sitting at 631 pips, all in the market. Missed a few. I only have to review the charts twice a day, which allow more trades and a lower risk than daily. Plus, I get to golf and read more. What can I say? But thank you for the education. Looking great for the future. So once again, even though we provide you with strategies and structure. We're more about educating you so that you can mold these strategies and the structure to meet your needs. There's not a system or that we trade. There's not a magic recipe for success. We just want to provide you with education that has stood the test of time. So in closing, let's recap before I answer any of your questions you may have. Here's what you're going to receive: 6 full weeks of trading tools and techniques, 3 proprietary Forex strategies, exact stop placement, exit, and profit targets, and numerous ones so that you can pick and choose which ones you want to apply. We also provide you with the educational signal service, okay? Conservative and aggressive versions. As bonuses, we're throwing in the ATM method, advanced trade management, as well as the PET-D. And I think the best thing here, which is often overlooked, is that you're getting teaching coming from a 39-year experienced trader, someone with trading experience for nearly 4 decades, okay? I know most people, they go to these webinars or courses, they're being taught by someone who's been trading for 5 or 10 years. I've been involved in every aspect of the markets for nearly 4 decades, so I've seen and traded just about everything out there. I know what works in terms of consistency, and I know what doesn't. So you have that experience as well. And as well, you have lifetime correspondence with me. This is not something that ends after 6 weeks. You can always contact me whenever you like because you're now a student of our Forex Trading College. In closing, remember, successful trading should be non-subjective. 2 people looking at the same chart should come up with the same exact scenario. Now, you just saw, looking with the PET-D applied, if all the bars are green, there's no room for discretion there. We both know that if the bars are green now, that you're in a short-term uptrend. You're going to be a buyer. So right off the bat, you know that you're on the right side of the market. Trading should be consistent. What does this mean? It means that we don't promise you the world. We don't promise you some fly-by-night system that's going to be millions of dollars of profit. We only want to instill a 2-step forward, 1-step back process. That is what will sustain you, consistency, not a $1 million method that will do great one year and then give it all back the next. Successful trading should be as simple as possible. You've seen just how simple trading is in the technique I shared with you today. Just a couple of rules, a couple of ways in which to enter. And lastly, it should make you a part of the process. One of the things I teach all my students in all of our courses, as well as the college, is to never ask or say, well, what do you think of the markets? What do you think this currency pair, this stock's going to do? Or who do you like? What markets do you like? Because once again, you're basically saying, I have no idea what to do when you have that type of an attitude. We want you coming in every day having an idea of what you want to do based off of your own education, not based off of what someone's saying in a chat room or a trading room, not based off of what guru is talking about on TV or what even someone's saying in a webinar. We want you to tell yourself what you're going to be doing that day, where you'll be getting out, where you'll be entering, and where you'll be placing your stop, okay? You have to be a part of the process. So here's our Elite Forex Trading College. You see all the information provided, everything. There's so much jam-packed information here that you're going to get instant access as well as lifetime correspondence. Now, because there's so much information here, the price for all this, as well as my nearly 40 years of experience, usually is $49.95. We're having an early bird registration for all the people attending today. We've dropped the price down to $44.95, and included with that, for a limited time only, we're also offering payment plans. So we realize not everyone can come up with that lump sum. We can structure a payment plan at Pro Trader Strategy so that you can have a small minimum deposit and you can still be in the college in the classes with me, okay? This also includes 1 year of trade signals. Remember, these are educational only. We don't want you just to blindly take the signals without knowing what they're based off of. But this is also included in the college. So we're going to be starting probably in this college very soon in the next few weeks. So here's how to access the information and become a member of my college. Contact Pro Trader Strategies. Once again, they are my sister site. You can email them right there. Simply email them or call them if you have questions about setting up a payment plan, 310-598-6677. As you see, the link on the very bottom is the link that will take you automatically to the sign-up page, but it's not live. You'll have to copy and paste that. If you want to go to a live link, just look to the far right-hand corner of the Go to Webinar box under the chat box column. You will see a live link has been posted. All you have to do is click that on, and it will automatically take you to the sign-up page. So I really look forward to all of you becoming students and members of my college. I'm going to leave this information up here right now as I open up the question and answer box. And remember, contact Pro Trader Strategies with any questions concerning that the price and the deposit for a a type of payment plan you want to structure, and anything concerning what actual platforms that will run on. But let me answer any teaching or educational questions for you. John asks, does a PET D work on Thinkorswim? Well, yes, it does, John, but in a different aspect. Probably better if you contact Pro Trader Strategies. But I know what they do is Thinkorswim does not allow us to put the PET D the way they're structured on their platform. So what we do is they've allowed us to use the data that you are using for Thinkorswim. We just splice that off and apply it to a free NinjaTrader platform. So all you have to do is you can still be using Thinkorswim, and you'll have another platform on another screen, or just toggle back and forth, that has the PET D and all the course indicators. Okay. Contact Pro Trader Strategies. They can go into detail, but all I know is that for no extra charge, no extra fee, our tech support will set that up for you free of charge. You'll get that instantaneously. Okay. John is saying that some of your strategies don't show the 50-period simple moving average. Yes, John, because that's one of the rules of our courses, and I don't want to really go into that right now because then I'm giving away some of the information I'll be teaching in the class, okay? Cuddy asks, do you apply the PET D when you trade with strategy 1, Donchian channels at the midpoint, or just trade with the higher low of the previous bars? Well, it's up to you. In other words, the question is basically saying, do you apply the PET D with different strategies, or do you use them by itself? Once again, this is up to you. If you want to put the power in your hands, we give you the different options, such as if you want to use it as only as a confirming tool. Do you want to use it as a trend identifier? Do you want to use it with the 50-period moving average? Basically, we want you to paper trade and research this on your own to see what works best with you. Some of our members only like to use the PET D as a confirmation tool. Others like to use it for continuation trading techniques and pullback techniques. So ultimately, there's no right or wrong answer. It's up to you what best suits your needs. In other words, these trading techniques all have high levels of consistency. It's up to you just as to which ones you want to use. Yeah, John is asking more about strategy number. I should say about the 50-period moving average. Yes, once again, that's covered in the course, but it's up to you. There's different strategies, and it's up to you as to how you want to apply it. Some of our members do use the 50-period, others do not, and it's up to you. Okay. Let's see. John is saying, I have Infinity through Sierra charts. Will this work with that? Yes, it will. Sierra charts will run our PET D as well as our add-ons for the strategy. So, John, if you have Sierra charts, that's fine. In fact, it works very well with Sierra charts. And we have a great tech support department too. So if you have any questions setting this up or getting the PET D up there, it's all included with the college that the tech support will set you up with all of this. Okay. Another question, Dennis asking, does it work with Metastock? Yes, it does. Works great with Metastock. And so, let me just, I know a lot of people are asking about the platforms. You have a lot of interested people out here, but they're more concerned with the platform. And I understand that because you don't want to purchase something or become a member of the college and it doesn't work on your platform. The basic platforms that all of our tools and techniques work on, along with the PET D and our strategies, are a TradeStation, Metastock, Sierra Charts, MT4, NinjaTrader, Thinkorswim, but remember, we use the data off Thinkorswim onto a free NinjaTrader platform. And there are a few others that all you have to do is contact Pro Trader Strategies and they can set you up in that right direction, okay? But it works on probably the most basic ones, okay? I believe FXCM as well. Let's see, John is asking, he's saying he loves what he's seen, but the price is a little bit too much. I totally understand. And, if this were just one strategy, I would say, well, yeah, we would never charge that much just for one strategy. But remember, John, you're getting 3 strategies. You're getting the ATM method, which is only taught in the colleges. You're getting the PET D, which is an expensive tool in and of itself. And along with this, you're getting 40 years of experience and ongoing instruction. So this is not something that ends after 6 weeks, okay? This is like live mentoring. These are live classes that will be videos as well, so they will be recorded, and you can watch them at your leisure as long as you like. So you can attend a live class and then have the video to watch as often as you like for the rest of your life. So you're getting this stuff that lasts a lifetime. And I'm not guaranteeing or promising you that you're going to make that money back, but many of our students in our other colleges have said that in the first 2 or 3 months, sometimes they were able to pay, or at least take a substantial large chunk and pay back some of what the course costs. So I'm not promising that. I'm not saying that will happen, but oftentimes, you get your trading back on track, and so you'll be happy with what you have, and many times it may pay for itself. Once again, not guaranteed or promised, but check out our testimonials. As we said, we have a number of students that have been able to really be consistent for the very first time. And talk to Pro Trader Strategies. They can set up a payment plan with you so that you don't have to come up with that sum all at once, okay? Naru is asking, is the trading every day or once a week? Oh, great question, Naru. No, it's once a week. We have live classes once a week, and we try to pick a time because we have people all over the world. We have students in Europe, we have other ones in Australia, some are in China, we have other people in the United States. So we try to pick a time that best suits everyone's needs so that everyone can come. If it has to be on a weekend, where that's the only time the majority of people can come, we will do it on a weekend. If it's during the trading day that meets everyone's needs, we'll do it for that. We'll work with you so that you can see it live and ask and converse with me live. But remember, if you can't happen to make 1 or 2 particular sessions, everything is recorded, and we provide you with the recording as well. Okay. Nabil asks, some of the bars are hollow and some are full. Some are red, solid, green. What's the difference? Well, the difference is basically the way you structure your candlesticks, and we'll show you that in the course. But we use the traditional method of candlesticks, which is basically a white background, and an up day is just hollow, meaning that from open to close is just white. It's a white background with a dark outline. And a down day is a simply black filled candle bar. Okay. Now, once you add the PET D, you can now see that the colors, if it's red, well, if it's a red, kind of a red tint, it's in a downtrend. Even if it could be an up day, it's just a red tint showing you that up days may still be in a downtrend and down days may still be in an uptrend. This is the beauty of the PET D, and we show you exactly how to do this and how to format it. We use the traditional way of trading candlesticks, not the way it's kind of been changed to meet Americanized needs, okay? John says he has a bad connection. Don't worry. And once again, if you have a bad connection, if you had to leave early, or if it came in late, we have a recording of this. But if you want to take advantage of that discount, you contact Pro Trader Strategies as soon as possible. Okay. Let's see. Naru asks, does PET D work with FXCM? Yes, it does. You can use it with FXCM and T4 add-on, and you can use all of our strategies. Okay. We're not exactly sure when the classes have started, because what we say, we're still offering this to our students, and we want to make sure that you all can attend live. But it will begin probably within the next 4 to 8 weeks. Okay, so and we provide you with a lot of information prior to that. You can start studying and knowing all of our basic philosophies and the foundation of our courses. Okay, but remember, the early bird sign up right now, it takes that $500 off. So if you sign up now, you're getting that $500 discount. A lot of students we have in the past, they've gone up to the wire and said, okay, I want to do this, but they're not entitled to that discount. So take advantage of that discount if you're really serious about taking your Forex trading to the next level. Once again, we decide through your input when to have the classes. So we just take a vote and see what the best time is for all people involved, and that's when we decide when the class is. If it happens to be on a weekend, we'll do it on a weekend if that meets everyone's needs. If it's better during the week, we can do it during the week. We will work with you to make sure that the majority of you are able to attend the live classes. Remember, if John seems to be still asking questions about the payment plan and everything, remember, John, contact Pro Trader Strategies. This is not a forum to be having that. What we do right now is just really talk about the classes and what's going to be offered and the teaching. Anything concerned with payments or with technical assistance, contact Pro Trader Strategies. They can work with you and they can put together something for you, okay? John is asking about the individual strategies. Okay, strategy number 1 is a pullback strategy. It's probably our most consistent pullback strategy. It's based off of one indicator, which we teach you and give you in the course. A very standard indicator, but one that's not used very often. We show you what it is, we give you the proprietary settings, and we show you exactly based off of this indicator where to purchase on pullbacks, so that rather than breaking out what we showed you today was a breakout continuation pattern, we like to buy on a sell-off to get a cheaper price, okay? And then we take advantage of those nice swings to the upside. And conversely, you can also go short. This works in any market, in any time frame. Strategy number 4 is our most consistent strategy. It's pattern recognition. In other words, we don't even look at a indicator. There's no indicators involved. I'm teaching you a specific pattern you should be looking for. So you know what this pattern will look like once you go through the studying and researching of this. This is a pattern I was taught to about 40 years ago on the floor. I used to use this for my intraday trading, but it works just as fine for daily bars, for weekly bars, monthly bars even if you want. This is strategy number 4. And then lastly, strategy number 5 is just based off of candlesticks. So it's a great candlestick pattern. We show you all the different ways in which to apply this. Once again, you can apply this candlestick pattern to intraday. We have some traders in the college who only use it on 10-minute bars. We have others who like to use it on weekly bars. It's up to you because it can work in all those time frames. But it's specifically based off candlesticks, a specific candlestick patterns, and there's no indicators involved. So see how simple these are. Now, we have individual courses in each and every one of these strategies. You're getting all of these at a really deep discounted price. I think if we offered all of these things which are sharing with you, the ATM as well as the PET-D, all on an individual basis, and you purchase these individually, it would cost you roughly about twice as much, close to $10,000. But we're putting it all together, discounting the price, and then dropping it $500 even more to the early bird registrants today. In addition, we're offering you payment plans. In addition to that, you're getting 40 years experience as your personal mentor. I'm here right alongside with you. You can ask me any question as long as you like, so it doesn't end after 6 weeks. So it's a lot of stuff you're getting here. We're not just throwing you some tape the way so many other websites do and say, good luck, just do this system. Whatever it says, you buy and sell here. We don't believe in that. We want to educate you because educating you is what will sustain you, okay? This is what has allowed me to be trading for nearly 40 years myself. Remember, any payment questions, just contact Pro Trader Strategies. They'll fill you in because everyone has a different scenario. Let me see here. Oh, Gene is one of our students and some other products. This is a great deal, better than the stock college. 3 strategies instead of 2. Hope they jump on board. Thank you, Gene. Gene's a great student of ours that joined our stock college. And trust me, yes, she's right. In the stock college, we only offer 2 strategies. Here we're offering 3. So this is a really good deal, and she's a great student, and her trading consistency has increased tremendously as well in our stock market. So thank you, Jean, for the testimonial. There's a lot of great information. I see most of the questions here are really a lot of technical and a lot of platform questions, and they have a lot to do with the payment plans. So once again, those are things that Pro Trader Strategy handles. My responsibilities just have to deal with teaching and mentoring you and instructing you on how to trade and basically how to take these different categories and bits and pieces and mold them to fit a strategy that best suits your needs. I'm sure Jean will see here, who's a member of our stock college. Not everyone trades the same, and we don't want you to trade the same. We want you to take a basic shell of a strategy that has a very high level of consistency, but then decide how you want to trade it, decide how you want to enter, decide how you want to exit, decide where your stop placement is going to be. We give you all these variables because no 2 traders should ever trade alike. That's why we don't teach nor do we trade systems. We don't have statistics because you can only have those things if you do the same exact thing every trade, and we don't believe in that. Just the same way an athlete will not play or shoot the ball or hit the ball the same way every time because there's a different environment every time they come up to play. That's the same way it is with the market. It's a different environment every day. You should not trade the same way every day. Therefore, we give you the tools and techniques to put you in charge, to give the power back to you so that ultimately you can make your own decisions, okay? Remember, if you have any questions on payment plan, please call Pro Trader Strategies 310-5, as you can see the number right there in front of you, 598-6677, or if you'd like, you can email them at trading@protraderstrategies.com. In conclusion, I want to thank you all so much for taking time out of your day here to come see us speak. I really hope that you've learned something today, this technique I shared with you today. I really hope that you'll see how simple trading can be. The only reason why most traders fail is because we make it more complicated than it has to be, okay? The way to become consistent is to use those 4 things and to keep it simple and to make you a part of the process. The good news is we offer all of this in the course, okay? So I really hope you can take advantage of this. I hope you can take advantage of the payment plan and the discount, and I look forward to all of you becoming students of my new Elite Forex College. Thank you so much. I will see you next time. Bye-bye.